As we sit here watching the tape on Friday, April 2026, IREN Ltd is currently trading at $48.05, which puts the stock down by roughly 7.6% since the opening bell. If you've been following this one, you know that the volatility isn't just a side effect, it is the entire story. While the broader indices are showing some mixed signals, the intraday movement here is telling a very specific story about institutional tug-of-war. We are seeing a high of $53.36 and a low of $47.20 today, and that kind of spread in a single session is exactly why the self-investing crowd has been glued to the IREN ticker. Most people looking at IREN right now are seeing a Bitcoin miner that is trying to change its clothes and become an AI powerhouse. The expectation in the market is that as long as Bitcoin stays buoyant, these miners turned data centers will follow suit. But the reality that I'm seeing under the hood is much more nuanced. The reason we are seeing this $48 level being tested today isn't just about crypto prices, it's about the massive $6 billion at-the-market share sale program that was recently expanded. That is a massive amount of potential dilution hitting the market, and today's price action is a direct reflection of investors trying to price in that new supply of shares. When you look at online investing communities, the chatter is all about the AI pivot. It's a popular narrative. But the reality is that IREN is currently in a high-stakes construction phase. They are in the process of energizing the Sweetwater 1 substation in Texas, which is a 1.4 gigawatt beast. If you were using investing sites to track your portfolio, you've likely seen the headlines about their Microsoft deal and their GPU financing. But the market today is asking a very fair question. How much does that growth cost the current shareholder? When a company tells you they might sell $6 billion worth of stock, it creates a ceiling that is hard to break through in the short term, regardless of how many GPUs they are plugging in. Take a look at the institutional activity today. We are seeing volume that is already pacing well above the 30-day average of 38 million shares. This isn't just retail traders on a Fidelity mobile app or a Robinhood app flipping shares for a quick gain. We are seeing blocks of shares moving that suggest big money is repositioning. If you look at the options chain, there is a heavy concentration of call options, but today's price drop is catching a lot of those traders off guard. It's a classic expectation versus reality trap. The expectation was a breakout toward the $60 level, but the reality of the dilution overhang is keeping the price pinned down. This brings us to the core of what IREN actually does today versus what it did 3 years ago. Originally, they were IREN Energy, a pure-play Bitcoin miner focused on renewable energy. Their business model was simple: find cheap green power, buy ASICs, and mine BTC. But as the halving cycles made mining more competitive and less profitable on a per-unit basis, they realized their real value wasn't the Bitcoin they held, but the power contracts and the physical substations they owned. In a world where every big tech company is desperate for electricity to run LLMs, IREN's 1.4 gigawatt capacity is basically digital gold. They've rebranded to IREN to reflect this shift toward being a vertically integrated AI cloud platform. They aren't just selling power, they are building the houses and the servers for AI. They recently secured $3.6 billion in GPU financing at rates under 6%, which is incredibly cheap for this sector. That money is going toward 140,000 GPUs that they plan to have running by the end of 2026. This is where the tension comes in. On one hand, you have a company that could potentially generate $3.4 billion in annualized recurring revenue. On the other hand, you have a company that missed its last earnings report by a mile, posting a net loss of over $155 million due to non-cash impairments and derivative losses. If you are using a Robinhood investments account or a Fidelity brokerage to manage your positions, you have to decide if you're buying the future or the current balance sheet. The smart friend advice here is to look at the cash position. Despite the headline losses, they were sitting on nearly $2.8 billion in cash earlier this year. They aren't in a liquidity crisis, they are in a growth sprint. But growth sprints require fuel, and that fuel is coming from the $6 billion share sale. This is why the stock is down today. Every time the price tries to rally, the market remembers that more shares are likely being sold into that strength. Compare this to other names in your individual brokerage. If you hold NVIDIA stock or Apple stock, you are looking at companies that are buying back shares to increase value. IREN is doing the opposite. They are printing shares to build infrastructure. It's a gamble that the infrastructure will eventually be worth more than the dilution costs. This is a very different profile than a stable name like a Tesla stock or the ETFs you might find through Schwab Intelligent Portfolios. This is high-risk, high-reward territory that requires a level of investment help that goes beyond just watching a green or red line on a chart. Let's talk about the competition. When you use the Robinhood trading platform or look at Fidelity ETFs that cover the crypto and AI space, you see names like Mara Holdings or Riot Platforms. IREN is actually outperforming them in terms of infrastructure development. While Riot is still heavily tied to the Bitcoin price, IREN is actively trying to decouple. Their deal with Microsoft is a huge part of that. They are basically becoming a landlord for the biggest AI companies in the world. But being a landlord requires buildings, and building data centers at this scale is notoriously difficult. Any delay in the Sweetwater 1 energization would be catastrophic for the stock price. I want to pause here for a second and get your take on the sector. Comment below how many shares of IREN you currently hold, or if you prefer the more established AI plays like NVIDIA stock. I'm curious to see if people are still viewing this as a crypto play, or if the AI data center narrative has truly taken hold in your portfolios. Looking at the broader market context, the interest rate environment is still a major factor. For a company like IREN that needs massive amounts of capital for construction, higher for longer rates are a headwind. Even with their 6% financing, the cost of capital matters. If you were doing online investing through an interactive broker's account or using a SoFi trading platform, you know that the cost of carry is real. Institutional investors are looking at IREN and comparing it to other picks and shovels AI plays. The consensus among analysts is still a buy with a price target around $70, but that feels like a long way off when the stock is struggling to hold 48. The technical setup on the daily chart is also showing some expectation versus reality friction. We saw a massive rally earlier in April, fueled by optimism about the Sweetwater substation. The expectation was that we would consolidate at $50 and move higher. The reality is that the $50 level has turned into a psychological resistance point. When the market opened today and we failed to stay above $52, the selling pressure accelerated. We are now seeing a test of the 20-day moving average. If we break below $45, the next level of support isn't until the low 40s. So what is the future outlook? There are two paths here. Path 1 is the expectation exceeds reality scenario. In this version, IREN successfully energizes its 1.4 gigawatt facility on time, the Microsoft deal starts contributing to the top line, and the company manages its $6 billion share sale slowly so it doesn't crush the price. If they hit their $3.4 billion revenue target by late 2026, the current market cap of around $20 billion looks cheap. You'd be looking at a stock that could easily double. Path 2 is the reality falls short scenario. This is what the bears are betting on. In this version, the data center build-out hits regulatory or technical snags, Bitcoin prices take a dive and hurt their legacy mining revenue, and the $6 billion dilution becomes a weight that the stock can't lift. If you were using an intelligent portfolio or a SoFi robo-advisor, you might not even see this level of detail, as those systems often smooth out the volatility of individual names like this. But for those of us doing self-investing, these details are everything. If you're managing your own money through Fidelity Investments or Robinhood Crypto, you have to be honest about your risk tolerance. IREN is not a set-it-and-forget-it stock. It is a transition story. They are moving from a volatile commodity business, mining, to a high-margin service business, AI cloud. The market is currently giving them a transition multiple, which is somewhere between a miner and a data center REIT. Once they prove the AI revenue is consistent, that multiple should expand. But until then, you should expect days like today where the stock drops 7% on seemingly no news, simply because the reality of the dilution is catching up to the expectation of the growth. To wrap this up, the contrast between the market's hope and the hard math of share issuance is what's driving the tape today. We started the day with expectations of a bounce, but the reality of a $48.05 price point shows that the overhead supply is winning for now. IREN has the assets, the power, and the contracts, but they are also asking investors to pay for that growth through massive dilution. It's a professional-grade balancing act. Whether you're using interactive broker stock trading for the low fees or the Fidelity app for the research tools, the key takeaway is the same. Keep your eye on the energization milestones. The transformers at Sweetwater are the real catalyst. If the lights go on and the GPUs start humming, the current price dip will look like a footnote. If they don't, that $6 billion share sale is going to feel very heavy. Stay sharp, watch the volume, and remember that in this market, reality usually waits until you're comfortable to show its face. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, subscribe for more updates.